You've got a trading plan. You spent hours on it, maybe weeks. You mapped out your entries, your exits, your risk management rules. You wrote down your strategy, printed it out, stuck it on your wall. You told yourself this time would be different. This time you'd follow the rules. This time you'd be disciplined. And then Monday morning hits. You open your charts. The market's moving. And within an hour, maybe two, that beautiful trading plan you spent so long creating is completely irrelevant. You're taking trades that don't match your criteria. You're holding losers too long. You're cutting winners too early. You're doing everything you promised yourself you wouldn't do. By the end of the week, you're frustrated, confused, maybe down money, wondering why you even bothered making a plan in the first place. Here's the thing nobody tells you. Your trading plan isn't failing because it's a bad plan. It's failing because you built it wrong from the start. You optimized for the market when you should have been optimizing for yourself. Let's talk about why every trading plan falls apart and what actually works instead. Most traders build their plans backwards. They start with strategy. What indicators should I use? Should I trade breakouts or reversals? Should I focus on support and resistance or moving averages? They get obsessed with the technical stuff, the sexy stuff, the things that look good on a chart. Then they write it all down. Create this elaborate document with entry rules and exit rules and position sizing formulas. And they think they're done. They think they've built a trading plan. But they haven't. They've built a fantasy. Because the plan assumes you're a robot. It assumes you'll execute perfectly every single time. It assumes emotions don't exist. It assumes you won't get scared when the market moves against you. It assumes you won't get greedy when you're up big. It assumes you won't get bored during slow markets. It assumes you won't get FOMO when you see everyone else making money on a trade you missed. Your plan is designed for a version of you that doesn't exist. And that's why it fails. Every single time. I knew a trader, Daniel. This guy was sharp. Came from a finance background, understood markets, could read charts better than most people I'd met. He built this incredibly detailed trading plan. I'm talking 50 pages. He had rules for every scenario. Trending markets, ranging markets, high volatility, low volatility, what to do pre-earnings, post-earnings, during Fed announcements. It was beautiful. It was comprehensive. It was completely useless. Because on trade number 3 of day 1, he broke his own rules. Saw a setup that almost matched his criteria, but not quite. Took it anyway. Lost money. Then spent the rest of the week justifying why that trade actually did fit his plan if you thought about it a certain way. Within 2 weeks, he wasn't following his plan at all. He was just trading based on what felt right in the moment, occasionally glancing at his 50-page document and feeling guilty. The plan didn't fail because it was wrong. It failed because it required a level of discipline that Daniel, like most human beings, simply didn't have when real money and real emotions were involved. Here's what actually happens when you trade. You're not sitting there calm and collected, robotically following rules. You're experiencing a hurricane of emotions. Fear, when you're in a losing position. Greed when you're winning and want more. Regret when you miss a move. FOMO when everyone else is making money. Boredom when nothing's happening. Frustration when you follow your rules and lose. Doubt when your strategy hits a losing streak. Your brain is screaming at you constantly. Close this trade. Enter that trade. Move your stop loss. Take profits early. Double down. This is different. The rules don't apply here. You can't ignore that. You can't willpower your way through it. And any trading plan that pretends those emotions don't exist is doomed from the start. The plan has to account for the fact that you're human. That you'll be scared. That you'll be tempted. That you'll want to break the rules. If your plan doesn't have built-in safeguards for your own psychology, it's not a real plan. It's just a wish list. Let's talk about why you actually break your rules. It's not because you're undisciplined. It's not because you're weak. It's because your plan is asking you to do things that go against millions of years of evolution. Your brain is wired to avoid pain and seek pleasure immediately. When you're in a losing trade, your brain is screaming at you to make the pain stop. It doesn't care about your stop loss. It doesn't care about your risk management rules. It just wants the bad feeling to end. So you close the trade early, even though your plan says to let it hit your stop. Or worse, you move your stop loss further away because you can't handle taking the loss right now. When you're in a winning trade, your brain wants to lock in that good feeling. It wants the dopamine hit of closing a winner. It doesn't care that your plan says to hold for a bigger target. It wants the pleasure now. So you take profits way too early and then watch the trade continue exactly as you predicted, leaving massive profits on the table. This is why your plan fails. It's fighting against your own neurobiology, and your neurobiology wins every single time unless you build your plan differently. The traders who actually succeed don't have better strategies. They have plans that account for their own weaknesses. They know where they'll be tempted to break the rules, and they build in protections. Let me give you an example. Mike was a trader who kept closing winners too early. He'd catch a great trade, be up decent money, and then panic and close it way before his target. He'd watch the trade continue without him and hate himself. He tried willpower. Didn't work. He tried writing down his rules bigger. Didn't work. He tried yelling at himself. Definitely didn't work. So he changed his plan. He added one simple rule. When he entered a trade, he had to close half at his first profit target and hold the other half for his bigger target no matter what. He couldn't close the second half early. Not allowed. Not negotiable. The first half gave him the dopamine hit he craved. It satisfied his brain's need for immediate pleasure. And because he'd already locked in some profit, it was psychologically easier to hold the second half. His execution improved immediately. Not because he became more disciplined, because he designed his plan around his actual psychology instead of pretending emotions didn't exist. Here's another massive reason plans fail. They're too complicated. You've got 17 different rules for entries, 8 different scenarios for exits, special conditions for volatility, different position, sizing based on market conditions. You need a PhD to remember it all. And in the moment, when you're actually trading, when money's on the line and emotions are running high and the market's moving fast, you can't remember any of it. So you guess, you improvise, you do what feels right, and your plan becomes irrelevant. The best trading plans are stupidly simple. So simple you can remember them under pressure. So simple you can execute them when you're emotional. So simple there's no room for interpretation. If you can't explain your entire trading plan in 2 minutes or less, it's too complicated and it will fail. Think about what you're actually capable of when you're stressed, when you're down money, when you've just taken 3 losses in a row, when you're doubting everything, when you're scared. You're not capable of complex decision-making in that state. You need simple. You need clear. You need obvious. Your plan needs to work for you at your worst, not just you at your best. Most traders build plans for the calm, rational version of themselves. The version that exists on Sunday evening when they're planning the week ahead. But that's not the version that actually trades. The version that actually trades is stressed, emotional, second-guessing everything, and desperately trying not to make mistakes. That version needs a different kind of plan. A plan with 1 entry setup, not 5. A plan with clear rules that can't be bent. A plan that removes decisions instead of adding them. Let me tell you what changed everything for me. I stopped trying to have a rule for every scenario. I accepted that most of the time, I shouldn't be trading at all. I built a plan that had exactly 1 setup. Just 1. If I saw that setup, I took it with the exact same risk every time. The exact same stop loss, the exact same target. No adjustments. No special circumstances. No optimization. If I didn't see that exact setup, I did nothing. I watched. I waited. I stayed flat. At first, it felt like I was missing opportunities. Everyone else was trading. I was just sitting there. But my execution became flawless because there was nothing to remember, nothing to interpret, nothing to debate with myself. Setup shows up, take it. Setup doesn't show up, do nothing. My win rate didn't change much. My strategy wasn't dramatically better, but my consistency exploded because I'd finally built a plan I could actually follow. Here's what most traders don't understand. The plan isn't the strategy. The plan is the protection system that lets you execute the strategy. You could have the best strategy in the world, but without a plan that accounts for your psychology, your emotions, your weaknesses, you'll never execute it correctly. The plan's job isn't to tell you what the market will do. It's to tell you what you will do regardless of what the market does. It's to remove decisions when you're least capable of making good decisions. It's to protect you from yourself. Sarah figured this out after blowing through 2 accounts. Smart woman, worked in tech, logical mind, kept building these elaborate plans that she'd abandon within days. She finally realized the problem wasn't the plans. It was her. Specifically, her need to always be in a trade. She hated sitting on the sidelines. It made her feel like she was wasting time. So she'd take marginal setups just to be doing something. Her new plan addressed this directly. She gave herself a rule. She could only take 5 trades per week maximum, not minimum, maximum. Suddenly, she became incredibly selective. She couldn't afford to waste one of her 5 trades on a mediocre setup. She started waiting for perfect setups. Her win rate jumped. Her stress dropped. Her account started growing consistently. The plan worked because it was designed around her specific weakness, her need to constantly be doing something. She didn't fix the weakness. She built a plan that neutralized it. That's the key insight. You're not going to fix your psychological weaknesses. You're not going to suddenly become a different person. You're going to be scared sometimes. You're going to be greedy sometimes. You're going to be impatient and doubtful and all the other messy human emotions. Your plan has to work anyway. It has to be designed for the flawed, emotional, irrational version of you. Not the ideal version, the real version. When you start building plans that way, everything changes. You stop fighting yourself. You stop relying on willpower. You stop breaking your own rules. Because the rules are designed around how you actually behave, not how you wish you behaved. Most trading plans fail in the first hour of the first day because they require you to be someone you're not. Build a plan for who you actually are. Keep it simple enough to follow under pressure. Design it around your specific psychological weaknesses. Remove decisions instead of adding them. And accept that most of the time, the best thing you can do is absolutely nothing. The plan that works isn't the one with the most rules. It's the one you can actually follow when everything's going wrong, when you're emotional, when you're doubting yourself. That's when the plan matters. That's when it either saves you or fails you. Build for that moment, not for the calm, confident version of yourself that doesn't exist when real money's on the line.